Thank you everybody for joining. Thanks, to the AIA with collaboration with ASLA for just hosting us this morning. We want to talk today about the financial challenges that some of the A&E, not some, I guess all A&E firms are basically facing, and kind of just going through some of the methods and practices that we as Precise have seen over the years that worked. Um, Overall, I just want to say for any credits questions, you might ask the Center of Architecture. I know there's some that are being given today, and there's this Q&A box at the bottom. If there's any questions, please feel free. Usually when I'm having those conversations, it's more of a conversation, but I can't see you. So please, if you have any questions, just put it right there. And I'll just share this beautiful deck that I prepared, and we can basically start. All right, so I will just say from the get-go that obviously every firm is unique, and every firm has been basically doing business either for years or again months. It doesn't matter, but whatever is working for you is working. We just gather multiple data points from our clients, and we just want to share some of the good practices and good habits that we've seen. Who are we? Which I guess it's a good segue to start with. Basically, my name is Tamir Schuster. I'm a partner at this firm called Precise. Precise basically provides management consulting services for just management control services for just A&E firms. Globally, we have about 4 branches with almost 30 years in business. Worldwide, there's almost 400 employees with 750 A&E clients. And all of the data and all of the information and all of the experience basically coming from this, just doing that for years and seeing multiple firms and good practices overall. What we want to talk today about is basically financial challenges or just struggles, and if there's ways to improve it. And the main thing that we want to start with is basically projects. That's the main source, if not the sole source of revenue. And we want to untangle why we have losing projects if we do. Usually when I'm asking these questions in a crowd, I'm going to get multiple answers. But the main one that we usually hear is pricing, which we always hear that if we could have got more in terms of just fees, we would probably do okay. In most cases, this is actually not necessarily the main reason. While pricing also might be an issue, it's not the main reason that usually we see that projects are being either losing or breaking even. For that sense, we need to know how to price the project. It's very important. But overall, there's other aspects of the projects that will actually lead to a profitable and successful project without jeopardizing, I would say, the design integrity or creativity of any firm. The first thing that we start with is basically the proposal. Until you're going to get an AIA approved agreement, the proposal is basically, I would say, the pathway to every project. And a strong proposal would lead to a successful project. And this is what we've seen multiple times. For example, the first thing that we want to do when we're actually writing out a proposal is to determine the structure. What do we actually do? What do we provide as a service? What is the scope? What is the schedule? What do we design in terms of square footages, in terms of construction costs? Putting as much information to really lay out the framework of the project that we're going to design is super crucial. Not leaving anything vague or I would say to personal interpretation is very important, as everything is based on our understanding of what we're doing during the project. This is the starting point. So building this framework of, again, the scope, the phases, the schedule, and with that, as we said, what we're going to do, it's also very important to say what we're not going to do. Some of the clients, it might be their first project, or they actually going into a new realm of working with an architect, a landscape architect, even an engineer, interior designer, it doesn't matter. And they need to know what you're doing versus what you're not doing, excluding aspects of the work, excluding some phases, excluding some tasks. If we know that we're not going to do it or not going to touch it, or actually even choose not to do so, we should set it right up in the proposal. The exclusion part, I would say, is crucial, as same as the structure. It's very important to know what we're designing and doing, and also what we're not doing. And as we're setting the stage, we also need to put in the billable rates. If the project is hourly or not hourly, I would say it doesn't matter. It's important that we will have billable rates in our proposal. Some of the additional services that we're going to talk about later on might be priced hourly, or just to give some of a segment of like how we're charging, what is our actually structure in the office. The billable hourly rates give us this, give, I would say, the client this kind of a getaway to understand how the clients or how the firm is being structured. If we have a principal and project manager, intermediate designer, junior architect maybe, and so on. So building this structure also helps us internally, but also helps the client to understand. Having this proposal initially is basically the first step to have a successful project. I usually call it the honeymoon phase. Everybody's excited about a new project starting. Everybody want to kick it off. The client excited, obviously the architect or landscape architect or the interior designer is excited. And sometimes we forget to just, take a breather, kind of scope it out, put a proposal out there, and not rush into just, ultimately designing the project before it's even started. The proposal is really kind of this only chance that we have to also set expectations with the client from the get-go. And I would say those three things, the structure, the exclusion, and also the billable rates, kind of give us this framework and structure to begin with. If the proposal is basically the first step to have a successful project, the next one is actually setting up internally the budget for every phase. And here it's also important, and I kind of mentioned it before. It doesn't matter if it's an hourly project or a fixed fee, or if it's a percent of construction. We need to know how we're budgeting it, basically for each and every structure of fee that we have. If we're billing the design separately from the markup, if we're basically excluding some elements and we need to basically set it up aside, all of those things really help us and just determine what is the budget. Later on, we're going to talk about not just involving, the owners or the principals in this process, but also the project managers. They need to know how they should set up their time, how they should set up the budget, just to have, again, the successful project that we spoke about. So looking at the fee structure is crucial. And then also looking at by phase. Obviously, a project is not just a standalone project masterpiece. We are breaking it down by phases. Every project, I would say, the general generic one is going to go from, again, SD or concept all the way to CA. Every phase is important. We want to make sure that every phase is profitable and not get to the end of the project and then determine if we had a successful project, yes or no. So setting up actually budgets based on each and every phase is important. It's important when we start a phase. It's important when we're in mid of the phase and when we ending it. We'll talk also about monitoring it. Again, breaking it out by phases is really important just to set up, again, the structure and the budget that eventually will be used by the project managers. And then as we're looking at phases, we also want to look at different disciplines, different services that we provide. We want to basically measure it all, right? We want to know where we're doing well versus where we should improve. If we have a specific issues internally that we need to face, we're probably going to see it when we're breaking it out task by task, phase by phase, and also by service and discipline. And that's I would say the next step or the second step, right? initially we set up this proposal. Now we're taking a step back and internally we're just preparing basically to start the project. We're not doing it midway that we're starting to set up budgets. We're doing it from the get-go. We have a good structured proposal. We're waiting for a contract or we got a contract. In the meantime, we're also setting up the budget for each and every phase and for the project as a whole. After doing so, basically the next step, right? Step 3 to have a successful project is to monitor the process. If we set the budgets and we have a strong proposal, it's all great, but we actually need to make sure that we're also following the steps to monitor and make sure that we're on track. Usually, what we suggest is that at least once a month, there's going to be some sort of a check-in regarding the projects. If it's sitting with the project leaders, which we want to involve, and whoops, right here, we want to involve the project leaders, the ones that actually are in charge of the project. They're sitting when we're setting up the budget, and they're in charge of basically the service. We need to make sure they're involved during the monitoring phase as well. We set up the budget, and then once a month at least, we're checking in. Are we actually on track? Are we meeting the deadlines? Are we getting to the deliverables that we promised the client? What is the next step? Where are we going to be by the end of next month and by the end of the quarter? Basically monitoring where we are right now, where we should have been, but also where are we going to go in the next couple of weeks. And from this basically sit down, we're also getting some action list items. What do we need to do? And how do we need to make sure that we're not just this monitoring phase, I would say, leads to the action list that will basically ensure a successful project also moving forward. If we are at this point right now that we do need to make some changes, or do we need to have some new expectation with the client, or just setting up the stage to maybe additional services, this is where we're going to do it. We're looking at the project, we're monitoring the process, we're seeing where we are. And from that point out, we're basically moving forward with the things that need to be done. What we want to do also, and maybe that's a segue that's a little bit different than what we want to talk about today, is also aligning the billing with this process. So as we sit once a month and we're basically reviewing where we are, we also need to invoice the client accordingly. What we prefer is to have a monthly invoice. So not a milestone base, meaning we're not going to bill only once we get to 100% DD. We want to make sure that every month we're looking at where we are in the project and making sure that we also billing accordingly. So if we're at 50% DD, that's what we need to bill. If we're at 75% DD, that's where we need to bill. Once we get to 100% DD, it's great. We're also going to bill that, but we don't want to wait and hold off billing. So when we're doing this monitoring process throughout the month, it's also important to also align the billing with it. The billing is also this check-in, I would say, between us and the client, telling them where we are. Sometimes they just don't know. Yes, we might have those clients check-ins and things like that, but they also need to know where we are generally. And the invoice and the billing is some sort of a mark of this is where we stand right now, and we're moving forward. The monitoring process, as I said, and the reason that I guess I'm stuck on it a little bit is just because this is a crucial part. If we have a strong proposal and we have the budget set up, but we're not following up and we're not involving the project leaders and project managers in the process, we're probably going to find ourselves after a couple of months having troubles. Just because we don't want to be retroactive when we're either asking for additional services or realizing that something is wrong in the project. We want to make sure we're doing it right away. So this monthly check-in process allows us to do that. Every firm, every entity will decide what is the right settings and how you do it. But overall, just make sure that you do it and you take the time to actually, I know it's a busy day and there's always deadlines and there's always deliverable, but, take a step back, 1 hour a month at least, to just see where we are. It's taking a step back on every project and just realizing if we're on track. And once we do, we're also going to realize that we do have a losing projects. We call it bleeding projects, for example. And we want to make sure that we stop the bleed. And we want to understand why it's happening. One example could be just discounted billing. Either we're not billing enough or we're not meeting basically our actual milestone, or if we're billing hourly, we might decide to actually not bill all of the hours, which is it's basically a disease that we need to put down. If we billing hourly, we need to make sure that we're billing the hours. I know that internally we're having those discussions. Can I bill it all? Was I efficient? Were my employees efficient when they worked on it? But if we're billing hourly and this is the way we set up the project, this is also what we need to do moving forward and making sure that we're actually billing it. We might see we might see a project coming into, again, the bleeding zone or the red zone or not breaking even / losing if we're discounting our billing. One more thing, and I would say crucial one, is change orders. During this monthly check-in, and I would say we don't even need to wait for a monthly check-in to understand that something is changing within the project. Pricing a project, I will be philosophical, I will just throw it out there, is usually when I'm pricing a project, it's more of an art. Yes, there's math. Yes, we take data points and we kind of know how we need to price it, but every project is different. And setting up a project that's going to end 4 years, probably, if a project starts right now, it's probably going to end 4 years or 3 years from now. A lot of things might change. Schedules might push. There's going to be maybe some redesign, value engineering. There's maybe going to be additional scope that's being added that we didn't price initially. So we fall back on the proposal, right? We said we're going to have a strong proposal that basically referencing what we're actually doing and what's the timelines. And if we see that we're actually off track, this is the time to talk about change orders, additional services. We might find ourselves in a situation that we do have a losing project because things have changed. And as things are changing, we also need to make sure that we're keeping up with the pace. Going back to the client, explaining what's off from our initial understanding of the project or where we are right now, and what is it going to take to get back on track, right? If the schedule is being extended, if we're adding more scope, if there's any changes to laws and regulations, all of those things will definitely affect our projects. This would lead, if we're not taking actions, to a losing project. And the last thing is basically inefficiencies, which could also happen. While I'm sure you have the most amazing employees in-house, there's going to be sometimes inefficiencies that happen. Some of it is because of, again, internal check-ins and things that we didn't do. Sometimes it's lack of supervision. Whatever it is, we need to know and we need to take action right away. Seeing those bleeding projects or seeing projects as a whole, understanding where they are, would lead us to take actions. And this is what we want to do. We want to take timely actions. We don't want to get to a place that we already have a losing project and there's no way to recoup from it. We want to make sure that we're basically addressing any issue that we have. If it's discounts, if it's any change orders, if it's any inefficiencies that we have in-house, and we're basically addressing it right away, fixing it, and going back on track, as I said, to have a successful project. This monitoring process or this process of making sure and reassuring every month that we're on track is crucial to do so. I want to show you a quick example of how we monitor projects. This is a very, I would say, simple example to two projects. Project one, as you can see, kind of a normal design project running between concept to CA, and we can call project two, again, maybe an interior design project. As you can see, the tasks of design and maybe markup with it too. Just to explain what you're seeing in front of you, I want to use this laser point. So we basically have the phases, right? We spoke about breaking out all projects to phases and then allocating budget accordingly. So you can see the phases of every project. Every phase also has a fee tag to it. And right next to it, there's just the financial information of a project. How much have we built so far? And what is the remaining backlog? How much are we going to bill or how much we haven't billed yet, but we have in our signed contract just for the moving forward phases? As you can see, those are all dollar amounts. But then to make it easy, I don't want to say easy, to simplify it for our employees and to project managers, we want to get it down to actually hourly budgets. Because while we might have a backlog of 60K, what does it mean from an hourly perspective? How much time could I actually allocate to a specific phase? We're looking at the hourly budget just to, again, simplify it. As you can see in this example, every hour's target is basically $200. So we're taking the 60K and we basically get 300 hours of a budget. Example for concept. Then we're looking at how many hours we actually spent or allocated on a specific phase up to this point that we are right now doing this check-in. For example, we did spend 270 hours on concept. We also spent 450 hours on SD. Knowing what's our budget, knowing how much we spent so far, we can also understand what's our balance or where we are and how much more time do we have to allocate. For example, you can see that concept phase is finished. We basically had allocated 300 hours. We spent 270. We're doing pretty well. We have 10%. We're 10% over our goal target. If we're looking at SD, this is the phase that we are right now. You can also see that we still have 60K remain left to bill. If we're just looking at our budget, right? Let's just look at it right now. We're basically, the last invoice was 50% SD. That's what we sent. If we're looking at the hourly budget, we had 600 hours allocated to just complete SD. Overall, so far, we spent 450. If we build 50% DDs, we would expect to actually spend only 300 hours to keep on track. As you can see right here, we actually spent 450. Our remaining budget to complete the phase is another 150 hours. That leads to the point that we're basically right now 25% off from our target. Is there a way to fix it? I believe so, because the phase has not finished yet. First of all, we need to make sure we're billing. Taking this projection as an example, we can see that we actually need to bill for June services 30K, so getting us to the 75% of SD phase. And we're actually projecting that by the end of July, we're going to complete this phase and going to bill the remaining 30K, not 25%. So as we're looking at it and we're saying, is there a way to actually fix the loss that we're seeing right here? First of all, can we actually bill? If we can bill the 30K that we projected that we're going to bill in June, then we're going to be back on track. And we just need to make sure that we're finishing this phase in the 150 hours that we had remaining. If not, this is raising those questions. Why have we projected that we're going to be at 75% SD and we're not? Is it because, again, something has changed? Is it because the client is indecisive? Is it because the schedule may be extending now and we need to push those projections away? All of those things would lead to a conversation maybe about additional service. It also might be that we can actually bill, but we just needed to get to the point of actually doing the invoicing process, which, given that it's the 15th of the month, we definitely want to make sure that we're billing by now. Another thing could be, again, inefficiencies and that we spend too much from an hourly budget. Could be because, again, we just have something in the chain of command is not working. Maybe, again, the information was not verified or checked when it ran between the project manager and the architect. There could be many things, but this is a point of time that we're basically sitting and talking about the project and making sure that we're going back on track. Another thing to look at, as you can see, is that they're basically remaining balance and budget for all the other phases. Before we start a phase, it's important to do this check-in again. This is the hourly budget that we have, and how are we going to make sure that we're actually completing the phase with the hourly budget that we have? Do we need to spend all of the budget? No. Obviously, spending less or allocating less time, but getting to all of the deliverables will yield a higher profitable project. But overall, as we're looking at this, and usually when we talk about hours, we're baking everything in, which is the cost structure, the multiplier, the profit margins that we want to have, and just getting to those, again, getting to those actual budgets will still have to yield, I would say, some profit and some margins. Either way, we just need to make sure that we're on track. We need to always go back every month and see where we are, how do we move forward, and what we actually think is going to happen next month, right? Because we're already in mid-July. Are we actually going to be able to bill 100% SD by the end of the month? this is an important time to just sit and talk about it, because as we're thinking about projections, this is obviously future billing, which yield to future cash flow. We need to know if this is feasible. Now, if we're doing projections, and as you can see right here in this example, maybe we just have 3 months, but as we do projections, this is also important for the team to kind of check in and say, okay, this is where we need to be at every given point. Can we actually finish SD by the end of July? Will DD kick off in August? All of those things are crucial in order for us to, again, maintain a project that is not going to be a losing one, and to make sure that we're on track. There might be a lot of numbers on the board, and I get it. As I said in this Q&A box, if you have any questions, I'll be happy to talk about it. As you can see, it's also getting me very excited to talk about projects, if they're losing or profitable. So if you have any questions, again, just let us know. But this is the monitoring aspect. And one thing that came out from just looking at this specific example is that we probably need to have a conversation about additional service. Something happened in SD. This is where the project leader or the project manager is going to tell us, hey, just FYI, the client asked us to redesign something, or the client asked to push back a couple of meetings, and now the schedule is being extended, so we can't really bill. This would lead to a conversation about change orders. I want to throw a couple of quotes at you of things that we usually hear. One of them is clients hate to pay change orders, and I get it. Nobody likes to pay more money than what they initially planned for. But this is where we go back to our proposal. And if we set the stage, right, and we have clarity in our agreement and proposal of what we're actually going to do, and what is the scope, and what is the timeline, and what we're actually going to address, if we do have it, then we can just go back as a reference point and say, hey, that's what changed, and therefore it will lead to a change order. What we like about being, I would say, timely about change order is that the client might have the option to say no, right? If they added to the scope, for example, there's a renovation, we're just doing the house, and now they decided to do the barn as well. If our proposal did not include the barn, and now they're asking us to do so, all right, that's great. As long as we can go back and say, hey, this was not initially planned, this is how much more it's going to cost you, because we're adding more square footages, we're adding extra spaces, and so on and so on. If it was there, and we can basically claim this change order, they might say, you know what? I don't want you to work on the barn. I don't want to pay this change order. I don't want to do it right now. That's okay, because at least we didn't spend or allocated additional hours to work on something that we're not going to get paid for. In most cases, as long as we're timely and it's clearly was, I would say, crafted, that it's not part of our scope, the clients will understand and would actually, be open to have this conversation about change order. So we were clear about what we're doing, as long as we're also outlining what was changed and what are we adding to our scope. We're crafting it in. This is part of the change order. Again, they might say no, they might refuse, or will ask you not to do this work. But as long as we're doing it on a timely manner, and we're not asking for something retroactively after we did it, it will probably lead to, again, an understanding from the client and an option to get this change order. Now, a change order is not about nickel and diming the clients. It's just about making sure that what we didn't price and what we didn't actually expect it to work on is now included, and we have a fee for it. As a reminder, every dollar of fee is being broken down to an hourly budget. So for every change that's happening, now we get this additional budget or hourly budget to work on a project. If we do it all right, and if, again, we have a strong proposal to begin with, we're asking for a change order in a timely manner, and we're actually explaining what we're going to do and what has changed, we can get this project back on track. We will get additional fees, and we will actually have this, again, successful process, making sure that everything that steers from what was the original intent of the proposal is actually being addressed. This is one, I would say, of the quotes, which is change orders. Another one that we usually hear is we have good projects, but the firm margins are not high enough. And this is actually a segue that I want to have to a different point of view. We spoke a lot about the projects, the process, the monitoring, the profitability aspect of it. But obviously, looking at the firm as a whole is very crucial. If we have good projects, successful projects, projects that we feel that we're getting a good fee for, why is our firm margins are not high enough? First of all, again, there's a whole different process that's happening, right? We're taking a step back from the projects. We're actually analyzing now the firm and not just the projects alone. So we need to make sure we're monitoring our process, not just from a project perspective, but from a management perspective on a monthly basis, or almost, I would say, on a weekly basis. This is checking in with our employees. This is checking in with our BD initiatives. This is checking in with basically our budget internally that we assign for specific expenses. When we're looking at the firm, now we're taking a step back and we're not just talking about allocating hours budget. We're also talking about actual dollar amount budget for specific expenses. We pay fees. How much do we pay rent? How much do we pay in legal or accounting fees? How much did we allocate to travel? How much do we allocate to marketing? All of those objectives, all of those budget, I would say, are being built into an objective for the firm. And then we're cutting off specific KPIs. KPIs, key performance indicators. We need to make sure that we're checking in with ourselves. What is the actually break-even point of the firm? Like how much do we actually pay a month just to keep the lights up? This is just our break-even. How much do we need to bring in terms of revenue? How much do we need to bring in terms of revenue given the amount of employees that we have? How much do we actually need to bill per employee? And what is even our multiplier? And I know multiplier is something that's being thrown around and you probably hear about it a lot, but the multiplier is almost changing on a daily basis because there's so many things that affects it. The salary structure, again, the utilization of the office, the expenses, the overhead, all of those things are obviously affecting, again, not just the internal practices of a project, but also how the firm is being operating. So spoke about the project, and now we're taking a step back and talking about the firm. It's very important to now understand not just what the projects are actually doing, what is the firm doing? And as we're breaking out those KPIs, the first thing I would say that we want to look at is utilization. What our employees are actually doing. As a principal, and sometimes even as project managers, now you're not overseeing not the day to day, but definitely not the minute to minute of what the employees are actually doing. We spoke about this monthly process of checking in with projects. I would say it's the same monthly process of checking in internally about our firm and what our employees are actually doing. This utilization report that you can see in front of you is just an example of looking back at what the employees have been doing on a given year. Let's call it 2024 because that's the last year that was done. You can see the name of the employees. You can also see the titles right here. You can see the hours, total hours that were basically spent by each and every employee, and how many of those hours were actually billable. This is very crucial, right? Billable hours are the hours that goes on projects, not necessarily the hours that we're billing the clients, but every hour that basically was allocated towards a project is a billable hour. Everything that is not related to project is non-billable. I'm excluding leave for a sec, but non-billable hours would be fixing the library, maybe having lunch and learns, doing admin stuff, marketing / writing proposals. All of those things are non-billable hours. And then another thing is leave. Usually between 8 to 10% of a full-time employee's time is going to go to leave. Depends on obviously the policy, but between holidays, vacation, sick time, personal time, we're probably going to find out that again, 10% of an employee's time, they're not even in the office. So it's important to look at both. What are they doing when they're in the office? And this is basically utilization without leave. And also, what's their utilization overall? Now, you can see some red and greens here. This is just our own internal benchmarks. For example, for us as Precise, we're usually advocating that 93% and up for utilization without leave is a good place to be at. So employees probably going to have some non-billable time, but the bulk, more than the bulk, see 90% and up, basically 93% and up. And for some employees, it might even be 100% because they don't have any admin responsibilities. That's the place to be. We want to make sure that our employees' time goes against project. As we said, that's the core service. That's our revenue source. So if it doesn't go on projects, we have an issue. Utilization without leave is one, and then looking at utilization overall, looking at how much, again, we paid an employee, which is basically 100% of their salary, and how much we're getting back in terms of hours on projects. If we scroll all the way to the bottom, you'll see that this firm, for as an example, has 82% utilization without leave and 76% utilization when we're including leave. This is not amazing, given all the benchmarks that we just spoke about, if we want to be at 93% and up for utilization without leave. And I just said that leave is probably going to be somewhere between 8 to 10%. The drop should be down to 83%. And here we actually see 76%. Not to get into specific or not to try to analyze it, but every firm should look at it not just on an annual basis, but actually on a monthly basis, because this is where we can detect, again, do we actually have enough work? Are our employees working on projects? Sometimes the projects, as crazy as it might sound, sometimes the project might seem profitable because, sure, from a budget perspective, there's not, we didn't allocate all the hours or we didn't spend all the hours. Our project should be profitable. But as we look at this mirror effect and actually understand our employees are actually working on projects, it might lead to a contradiction. So making sure that our employees actually utilize and work on projects is a key. Looking overall, just billable hours on a monthly basis, we would say normally that, again, every full-time employee should get to 160 billable hours a month. You can see the monthly averages right here. You can see that the benchmark for this specific company is actually 150. All of the employees are not reaching their benchmark. So when we set up those targets, when we set up those objectives, we're actually 14% below. And this is on an annual basis. So this is not 1 month off. This is basically kind of a trend that happened throughout the year. This needs to be addressed. If utilization is actually as low as it is, our multiplier goes up. It means that our employees are not working on projects. It means that they're not as billable as they should be. Do we actually have enough work to sustain all of the staff that we see right here? Having the staff or sustaining the staff is a question that basically staffing is the holy grail, I would say, of every A&E practice. And as we talked about looked back at what the employees did, we also want to understand what is actually the time commitment that we need to have moving forward. We call this report staff allocation. This is basically where we take our billing projections, and we kind of spoke about billing projection before, right? So we're looking at the projects, we understand where we are. We also want to understand where we're going to go. Where are we going to be in the next quarter? So in this example, you see projections for July through September, Q3 of 2025, and it's being broken down by a project manager. So we can actually take this information and understand how do we allocate not just budget and hours on each and every project, but also staffing. So for example, just to make it simple on everybody, the billing target here and this specific example is 25K per professional employee a month, which means that if we're aggregating James's projects for Q3, we will get to a point that James needs 3.8 professional employees to work on his projects. Currently, on James's team, there's only 3 employees. Now, do we actually need to allocate this extra 0.8 employee to James? It's a conversation with James. The project might not need it, and we can use this difference elsewhere. But we're also not holding back if James actually needs this allocation of staff, right? Because the project could actually afford it. And it's very important to look at it and understand, again, what's the future deliverables and what's our projection moving forward, because that's how we should staff the projects. when we're looking at staffing, we have to align it with billing. We have to align it with the actual fees that we're going to get. I know there's a lot of back and forth about, oh, but we have to do it, but we need to spend more time. But it doesn't matter what we're billing, we have to get to, again, a certain deliverable. There's also designing according to your budget or making sure that we're staffing according to the budget. And in this particular example, as we're actually aggregating all of the project managers, as you can see in the bottom, I'll take this laser back. As we're looking at staffing for the next quarter, we actually see that in order to properly staff all of the projects, we need to have a team of 12 employees. We're actually 11 in the office. So what it leads to, if we really need all those employees in order to staff the project, it might be a conversation about hiring. Hey, we're actually off by one employee. Let's go out to the market and find this employee. But that's Q3. I would always advocate to actually look at 2 consecutive quarters to make staffing decisions, hiring and firing. So if we're looking at the difference and we see a positive difference, when we're looking at Q4, we actually see at the bottom that we're actually going to be in a deficit, or we're going to be overstaffed by almost 2 employees. And that calls for action. So we're not going to hire just to let 3 employees go in Q4. We need to make sure that we're properly staffing the projects given what's going to happen in the next 6 months. In this situation, if you're going to ask me, okay, so what do? We need to start thinking about maybe how we push some deliverables. How do we get to maybe we're asking the team to take vacations in October and not September. Again, just throwing things out there. Whatever it is to get to the point that we can actually not hire, because as we can see, we're going to get to the point that we actually need to fill in the gap for the employees that we currently have, and we need to make sure that we're filling the plate with new work. So if we can see 2 consecutive quarters, I would say, of positive difference, that calls for action of hiring. I wouldn't say right away. Again, we need to look at the numbers. But if we do see that there's a need for additional staff, sure, we need to take action and add this employee. If we do see that there is ups and downs, as usually we see in, again, the A&E industry, we need to see how we're kind of balancing this curve, right? Making sure that the team could sustain itself, making sure that the office and the practice is staying consistent with what it can afford, and not just making radical decisions, I would say, on a quarterly or a monthly basis, hiring or firing. So that's from a staffing standpoint. As you can see, I hid it from you, but it's 25K per professional employee per month, just from a billing target. We spoke about the project. We also spoke about the firm. And just to ensuring that the projects are profitable and that the team margins are profitable, it takes the two, right? So as I said before, you can have a profitable project on paper, but somehow the firm is losing. We need to make sure that we actually look at them both, the firm, the project, and making sure that it all work together. This is a process, as I just said, that takes monitoring on a monthly basis, on a weekly basis, almost on a daily basis, making sure that we're on track, making sure that we're addressing any changes that happen on a very timely manner. And ensuring this will basically lead to a cycle that we have a profitable projects, and with that also a profitable firm. And as I'm getting to it, this is basically the end of the presentation. And as you can see, I could talk about this forever, and I would love to take your questions because I do think it's important. And overall, just thank you for listening. And if it helps somebody, I'm happy and would love to help even more. You have my details right here if you want to scan it up. And I think we can open it up for questions, the Center of Architecture. I'll just stop sharing so I can actually see. So Okay. One of the questions, and I'll just answer it live to make it easy, is if we have teams that um, underbid your proposal, and how do we address it? So how aggressive we want to get, and that's actually kind of open it up to maybe another segue about projects overall and firms overall. The way we see it, and again we've seen it, across the board, is that while all firms or every firm is unique, the structure kind of remains. Meaning, there's employees, there's overhead structure, and the time that's being allocated is the most important thing. So I think that when we look at two proposal, they're probably not going to be the same, not from a free structure, but also not from a scope perspective. I would usually say if there's another proposal that underbid us, we need to see, or if the client is asking about it, is what is different? Is the scope different? Did they actually price everything? Is their fee metric is totally off, meaning it would lead to just additional services moving forward. Some clients, or not our clients because we're totally against it, but some would underprice the project just to get their foot in the door. I don't believe that this is the right practice. I don't think that's the professional thing to do. But overall, if we do see it as professionals, we do need to say something about it. Your practice and your experience would actually lead to you giving, again, advice about if a project is feasible in a certain amount of hours or fee, and if not, if, as I said, all projects or project could be priced in multiple ways, could be priced differently in terms of the actual scope and the actual exclusions that are happening. When there's a wide gap, it's probably not because, again, of a pricing issue. It's probably because there's two different bids, meaning it's two different scopes that are being priced at, and also if somebody's just trying to get their foot in the door, I will do my best as the architect or the interior designer to just ring the alarm bells, and just from your own personal experience say that you know that it's not doable, and they're probably going to get hit with, again, multiple change orders moving forward. Um, is it going to be convincing enough? I don't know, but would the clients come back to you when they have actual issues? I believe so. And that's what we also seen, that staying professional and staying current and basically knowing your practice and your business and knowing how to price would lead to eventually satisfaction in clients, repeated clients, and obviously referrals. If somebody always underbids just to get their foot in the door and then charges the clients, additional services or change orders on everything that happened just because they didn't price it, I don't see many referrals come out of this specific client. So I don't advocate to this approach. I don't think it's the right thing to do. I think every project needs to be priced accordingly. And when we need to get aggressive, we should be aggressive. That's also something to say. If we know that right now we're missing projects for the firm and we have our objectives and we have our budgets and we have our KPIs, but we are very hungry for business, we should be aggressive to the point that, again, we're not losing, but at least we're sustaining what we build, which is also very important. So we might not get to our margins, but adding this extra project might keep, one or two or three employees around, and we won't have to make the staffing decision until 3 or 4 months down the road. That's my take, I would say, about that. Another one, and as I'm reading, you're going to have to excuse me. Climate change or man. That's actually a very good thing that came up as a question. What about changes in regulatory or legislative changes that are happening? And that happens all the time. You can clearly see it. It could change in a tweet right now, but giving the climate and some uncertainty, and I'm taking you back to basically the proposal level. When we're pricing a project, when we're scoping out the work, it's very important to just actually say what we know right now. And in the exclusions, I know a big topic right now, for example, is tariffs. In the exclusion, we can say, that this is given current regulation and legislation structures. And that's kind of protect us, because what we know or what we control is internally. We control our design, we can control a schedule, we can control the deliverables. We don't control the macro geopolitical aspects of the world. And therefore, when we're pricing a project, we're trying to understand to our best knowledge what's going to happen probably in the next couple of years. We're going to have to give raises, there's going to be inflation, maybe we're going to add additional space. We're actually now thinking about, adding a marketing person, taking all those things into account and trying to price a project for the next 3 years. It's not an easy task, but if we do it, we only do it based on what we know right now. Any changes to, again, laws and regulations will probably yield an additional service if we're actually midway through the project. If there's any zoning changes or code changes that happened 1 or 2 years into the project or through our phases, this is the point in time that we kind of stop and we just set the expectations as we said with the client. And that goes out to almost everything, not just legislation, but what we know given the current climate. And as a follow-up to that, time management, giving legislation and regulatory work is also important. As principals, as owner of the firm, where should we put our mind and focus at? To me, is very critical. The core business, which is obviously the design integrity, the creativity, the reason that client comes to you, this is why you do what you do. And this is where you need to put your focus, time, and attention. Getting new clients, 100%. But when you're thinking about other macro level things that happening in your firm, from running your payroll to basically dealing with R&D, all of those things are not things that necessarily you need to put your mind and attention to. There could only be somebody else who's professional, who knows more about those things, and their time would probably serve you better than you trying to do so yourself. And I guess with that, and me talking for an hour, we're almost done. From the Center of Architecture, as you can see, any questions about credits or just filling out the form is right there. I will just put it back as we're finishing, but if any of you want to talk about it more, my information and details are right here. We love what we do, and we love talking about the business of architecture. So for any questions, feel free. And thank you. Thank you again for the IA. Thanks for the collaboration with the ASLA, Center of Architecture. Thank you for hosting us. And that's it. Thank you very much.